everybody, welcome back to my channel. Okay, so today I want to film or refilm the last video because as you can tell, I am no accounting expert. Actually, I have no accounting background whatsoever. But that doesn't stop me from trying to understand the financial statement. Okay, so I need to qualify certain things that I've said. I pride myself in being very accurate in my usage of the English language and terminology. So when I'm expressing things, I try to be as accurate as possible. So say I'm feeling sad, I would say I'm feeling upset about whatever I'm upset about. And if I'm happy, I try to divide it into feelings of joy, feelings of ecstasy, feelings of delight. So yeah, you can get the drift. I try to be as accurate as possible. So that's why when it comes to accounting, I am out of my depths, but it's okay because we can learn from our mistakes and push on. I'm going to rectify certain things I said. So I talked about 3 financial statements. Actually, I was being a bit inaccurate there, but what I really mean is there is one financial statement when it comes to the accounting world and also what exists in annual reports where companies are showing us how they have done financially. So it's like their financial track record. So you will find me getting some inaccuracies here and there, but here's the gist of it. There's one financial statement, and the financial statement consists of different components. From what I understand, there are 5 components, and out of that 5, there are 3 components that I really zoom into as an investor, and the 3 components are the income statement. So an income statement is inclusive of if the company is producing goods or services. You can call it a profit and loss statement. So yes, that is the first component that I zoom into. And the next component is the balance sheet. And after that, we have the cash flow statement. So these 3 components sit within the financial statement. And yeah, they are actually components and they are not separate financial statements as I mentioned in previous videos. The understanding is this: there is one whole financial statement and the components are interlinked because there are parts of the financial statement that will lead us to the next component and the next component. So they are very much interwoven, and yes, I will also show you a financial statement here and the different components. So I will link it down below as well if you want to check out with more time on your hands and things like that. Okay, so let's jump into the figures. First thing that we are looking at in the financial statement component of income statement is actually revenue. And I'm going to leave the previous video as it is, but you can kind of see where I am bridging the gap between my understanding from the previous video. Okay, so revenue as it stands is the same, and let's just take for example, we are looking at a business that sells teddy bears. Let's try gross profit again. So from here is what I understand. After we have had a look at the revenue numbers, also known as sales, also known as turnover, what we're gonna see next is when we minus off cost of goods, because we're talking about a teddy bear company. So let's just say we have spent money on raw materials, making the teddy bear, where there is stuffing, where there is cloth involved and whatever goes into making a teddy bear. I think it's a lot of sewing actually. We have accounted for the cost it took to produce those goods. After that, what we get is gross profits. So once we have gross profits, we have a few other components that we will get into in another video where we deep dive into what is gross profits, what is earnings before interest and taxation, and then what is earnings before interest taxation, depreciation, and amortization. So there are a lot of technicalities that will take a separate video. I think that's the best way to go about it, to really explain, and then it also gives me more time to do more research and more homework as well. Let's give us the overview. So there is revenue. After we minus cost of goods, we get gross profits, and from gross profits we add back in other income, and then we minus out operating expenditure, then we get EBITDA. And after we get EBITDA, we minus off depreciation and amortization, we get EBIT. After that, we minus off finance costs, we get profit before tax. And after we minus off tax, we get profit after tax. So this profit after tax is where we often find ourselves as the net profit. So profit after tax is net profit. So there is a lot of terminology here, and it is pretty confusing, but as an investor, we are looking for what is actually useful to us. So things that are useful, again, are revenue, gross profit. We do like to look at operating costs, and after that we look at profit before tax and profit after tax. So that's what we are focusing on first, because if we try to focus on everything, it is pretty overwhelming, and I get that completely, because if you are not an accountant or you are not from the finance industry like me, then it is generally how we feel about looking at the stock market. So that's why we're doing this video today. We're trying to unravel the mysteries behind all this convoluted language. Yeah. Anything else that I probably said wrongly in the video? Okay, I talked about total comprehensive income, and this comprehensive income, I guess I can explain a little bit further. So we were talking about a teddy bear business where they are manufacturing teddy bears. Sometimes these businesses have other income, and this can come in the form of rent received. Let's say this company actually rents out a portion of its space or its office spaces. Perhaps they have a very big manufacturing plant and office building, and they don't need to use all of it, so they rent part of it out. So that rent received is considered part of their other income. And let's say they have put money in fixed deposit or in the money market and they are receiving interest, so that also comes into the income statement in the form of other income, and all of this needs to be accounted for, even though this company is solely focused on making teddy bears. It is separate items. One appears on their revenue where they have generated money and income from their teddy bear sales, and on the other side they have other income of rent or interest received, things like that. I think there is also one very important thing called gain on disposal, where they have disposed or sold off certain assets, and that is generally what we see a lot of in other income, where they have one-off sales of one of their assets, and it is a big chunk of money that needs to be accounted for in the financial statement. Within the income statement component, it will show up in a different component later on as well. Okay, so I hope this clarifying video helps. And again, thank you for looking out for me. I am definitely very grateful for all the help I get along the way. And that doesn't mean to say that I won't make videos in the future where I make mistakes or make mix-ups with my concepts. I try to keep it as real as possible because I am definitely not perfect in my understanding, and yeah, I try to show that I struggle too, and I'm sure all of you out there are struggling as well in more aspects than just reading financial statements. So yeah, thank you for watching this video, and thank you for being kind, and I will see you in the next one. Good luck!